Good morning. It's Wednesday, February 1st, 2023. I'm John Caro. This is Eric Sapanik, and this is the Gold Spot. Good morning, Eric.
Good morning.
Looking good?
Thank you.
Looking
You
good.
as well.
We want to start with some numbers we received yesterday that kind of gives us an idea of what's going on outside.
Yep, it is now February. We're just saying, what the heck happened to January?
It's gone.
So we now that we're closer, we're into February now, and W-2s are going out. A lot of the books are being closed on companies, the recaps. Well, the World Gold Council came out and we got some statistics on global demand. As you know, we had mentioned that our company took in a record amount of sales in 2022, and then also competitors, wholesalers, all of which were seeing record numbers. Also, the auctions for bigger coins showing some of the largest numbers we've ever seen with some of the big boy coins, $4 million coins, $3 million coins. We're going to talk a little bit more about that in Gold Spot Overtime. But what I want to talk about right now is the numbers that they gave us. So, starting off with this, and then I'm going to ask you a question here, John. Annual global demand was 4,741 metric tons, which is up 18% from the year before. Retail investors did a lot of the heavy lifting there. 9-year high for them, 1,217 metric tons, and that's up 10% from the year before. And then the central banks, this is the big one. Central banks, 1,136 metric tons of gold, the highest level that they have acquired in a single year since 1967, which is a really astronomical amount of time. And why all of a sudden, John, do you think the central banks are swallowing up gold at this ravenous rate?
We speculate a lot, we give opinions. To me, actions speak louder than words. They're buying a lot of gold in spite of their constant drumbeat support of fiat currency. Fiat currency is strong. Please don't worry, it's just another $3 trillion we're printing. But they keep buying hard metal around the world at tremendous rates. And it's got to be either they're planning something, which we can't know, or they're just reacting to what's going on in the world economy, and they're as nervous as our clients are, as the man in the street is. People keep returning to gold century after century when things are unstable, uncertain, and scary, and it's scary these days. The only other explanation is one I'm not willing to go to, that there's a plan. I don't think there's a plan. A lot of people do. I think this is all reactive, and you can see it in the fact that these numbers keep going up and up and up. And your next question is going to be, why is the spot market so soft?
I mean, of course, that's what everyone wants to know. Why is the spot market so soft?
Why is it not reacting? And again, actions speak louder than words. JP Morgan had some guys convicted of manipulating the silver and gold spot market last fall. It's not the first time. It won't be the last time. We've seen it with Deutsche Bank in the past. There's a great incentive for these big players to keep the spot market down because they buy. They buy a lot. A good example are the ETF issuers. They have, by rule, they have to have a certain amount of hard metal, gold, in their control in order to issue the ETF shares. And they're really good at selling the ETF shares. And it doesn't have to be dollar for dollar. So my suspicion is they sell the shares faster than they acquire the gold to stay in compliance. And we're seeing that as another factor. I'd like to see some
Why would they be willing to do that?
To do what?
To put themselves in a situation where they're overextending.
Greed.
Because they can get away with it?
Because they can.
Fair enough.
Why does JP Morgan keep getting caught, keep paying fines, and keep doing what they're doing? Because they can. It's as simple as that. And beyond that, and again, I sound like I'm repeating myself, but protect yourself at all times. Gold is still the baseline.
I think one thing that's important to also consider is the idea that central banks are stockpiling gold the way they are. The reason why, and I've said this before on the Gold Spot, but the reason why they stockpile gold is to to hedge themselves when it comes to the currencies that they issue and that they deal with. I mean, gold is the one thing that they stockpile. It's not silver, it's not platinum. There's no other thing out there it's not Bitcoin, it's gold. Right. So the gold reserves that they're bringing in, to me, shows a big red flag that the hedge needs to be there because they're concerned about currency.
It's an old habit. Gold has always been the safety net. And in spite of all the rhetoric and all the economic gobbledygook, they're telling us that that's still true.
I agree. All right. So any predictions here for February as far as gold prices?
Gold prices, more of the same, up and down, staying in the middle range. There may be some ups, there may be some downs, but
how about demand?
Demand's going through the roof.
We've seen that. I mean, our first week, it seemed like we were a little bit slow, and then right after that, it was off to the races all over again. So
big month. Big month.
And also, right now, to kind of also let clients know that time frames on deliveries also right now can be a little bit delayed because of some crazy weather, across the nation. So something to also consider. Well, thank you very much once again for joining us. I think that's going to wrap it off for today. But one last thing, we have a new Petrodollar Report.
We've tried to update it and make it more topical and current. The basic information hasn't changed. But again, part of the pressure on gold is what's going on with China, Saudi Arabia, Brazil, South Africa, India. They're starting to pull away from the dollar as a reserve currency. I don't know if they'll get there, but they're acting like they think it's going to happen.
And we have that available for you in digital copy, also hard copy as well. Happy to email it, text it. Go ahead and contact us. You can email us at contact@sbcgold.com, or you can go straight to your broker if you already have one and you talk to them regularly. By all means, please go ahead and email them. In the meantime, we'll see you on the Gold Spot Overtime. Thank you, John.
Thank you. Have a good day.
Bye now.